Oil prices have risen above $100 a barrel today for the first time since 2022. Petrol prices could increase even further as a result of the ongoing conflict, with investors panicking about the biggest single-day spike in 6 years. But President Donald Trump says the short-term price increase is a very small price to pay for world peace. Let's get the thoughts and opinions of Noureldeen Al Hammoury, Chief Market Strategist at Equiti Group. Noureldeen, great to have you on the show. Thank you for joining me. So oil prices...
Thank you for having me.
Pleasure. Oil prices have seen the biggest single-day spike in 6 years. What did you make of the increases in oil we saw earlier today amid the Iran war? They did shoot up, but kind of stabilized a little bit now.
I mean, what we saw today or earlier during the Asian session, markets rapidly pricing geopolitical risk rather than just a traditional supply shortage. As everybody knows, nearly 20% of global oil flows pass through the Strait of Hormuz, which is officially closed, or at least the tankers traffic is down by more than 95%. And when traders fear disruption to the corridor, prices can move very aggressively. The spike, of course, we saw again, as I said, during the Asian session, reflect panic buying, at least in the physical market. But at the same time, there's the problem now. It's not about production. It's not even about storage. It's about delivery. Mm-hmm. And the fact that prices stabilized slightly afterwards suggests traders are now waiting to see whether the disruption to shipping becomes longer or it's going to be temporary. Over the past couple of minutes now, we're hearing the U.S. President Donald Trump talking about he's looking into measures in order to put down a little bit, at least some sort of a drag from the oil rally. That includes some sort of tax cuts. You're talking about higher deficit once again.
So oil has stabilized for now after hitting $120 a barrel, as you mentioned, after that large spike at the Asia Open. But do you fear the upward trend could actually continue from here?
I mean, at this stage, now we're in the end of the first or the beginning of the second week of the war, and further upside is the risk of further upside remains, because one important thing, that logistics situation is still the same, and if it deteriorate even more, this is going basically to keep on pushing oil higher. What matters now is not only how much oil is produced, because it doesn't matter, but whether it can safely be transferred or to reach the global markets. If tankers traffic through the Strait of Hormuz remains very constrained, which is the situation now, markets could price in additional risk premium very quickly. And in that scenario, oil could easily test about, I would say, 120, we would go back again, and even 130 and even $150 would not be something that I would take it off the table.
Yeah, and I was just about to actually ask you that, Noureldeen, as we're talking. I was thinking, how high do you think oil could go? Do you think it could be 150, as you just suggested, or possibly even higher?
Yes, possibly even higher. I would say that as long as the traffic is now down, there is no reason for oil to stay stabilized. Even now, I would say the decline that we saw over the past couple of minutes, it was just basically a reaction of the verbal intervention of many countries. That includes also the G7. A couple of minutes ago, we saw some statements saying we are ready to release some sort of from the reserves, but we are not there. We're not there yet. So verbal interventions, we will have to wait and see how this is going to play out. But at the same time, if nothing changes on the ground from the security of the Strait of Hormuz, I see no reason why oil cannot be over 150 even.
And let's talk a little bit about the G7 countries, because, of course, they were meeting. They've said it's not ready to release emergency oil and gas reserves just yet. But do you think this hesitation is risking further spikes in energy prices and economic pain for consumers?
That's what we always see from when it comes to politics. Strategic reserves release can help stabilize markets in the short term, adding some immediate supply and reassuring traders and governments that they are prepared to intervene. However, the effectiveness depends on the nature of the shock. If the issue is purely supply disruption, reserves can easily can ease the pressure, but if the problem is the transportation risk or shipping disruption in the Gulf, then reserve release tend to provide only a temporary relief unless or until the geopolitical situation improves. No geopolitical situation improvement, then the price of oil might even spike even higher. And to the point, Russia even intervened verbally, saying they are ready to supply Europe with energy if they ask. So we're seeing, again, it's the verbal interventions, and the market is back into wait-and-see mode. What happens over the next couple of hours?
Yeah, absolutely. It feels hour by hour right now, doesn't it? But how much upward pressure could this put on global inflation? And which sectors are likely to feel it the most? Because we're not just talking about oil when it comes to gas in your house. It's flights, it's tourism, it's directly linked to so many things.
The war came at maybe the worst time. Inflation was already sticky. Yes, we had a situation where disinflation was faster, but at the same time, most of the inflation was sticky. Oil above $100 tends to push inflation higher quite quickly because, as you know, energy feeds into almost every part of the economy. Transport costs rise, manufacturing costs rise, or increase, and food prices often follow because of a higher logistics expenses. The sectors that feels the first, at least, are airlines, transportations, chemicals, heavy industry. But if the rally basically persists, the broader concern for central banks is the higher energy prices could slow the disinflation trend and complicate decisions around interest rate cuts, which was supposed to happen this year. For example, the Federal Reserve was expected a day before the war to cut rates by twice from now until the end of the year, but now markets are not pricing any rate cut. Matter of fact, there might be even a chance the Federal Reserve will be forced to even raise rates if this conflict continues for more than maybe a month or like 4 to 6 weeks.
Noureldeen, yes, you're absolutely right. Could affect those rate cuts for the central banks globally, but great to have you on the show. Noureldeen Al Hammoury, thank you once again.
Thank you for having me.